Hello, everybody. This is Toni Turner, and welcome to the market now as of about 11 a.m. Eastern on Friday, January 27th. Before we start, please join us at the Money Show in Orlando, February 8th and through 11th. I will present a session on February 10th entitled Buy Low, Sell High, Power Up Your Profits with Active Investing. Please join us. For more information, go to worldmoneyshow.com. And now on to the market. The Dow and the S&P 500 are trading slightly lower at the moment, while good earnings last night from Microsoft and Intel are keeping the Nasdaq slightly higher. Many stocks, though, today are taking a breather following the Dow Jones Industrial Average's 3-day winning streak, which has kept the index firmly above the 20,000 mark. The post-election rally reignited this past week following a solid start to earnings season and optimism over President Donald Trump's pro-growth initiatives, catapulting the Dow above the 20,000 milestone for the first time on Wednesday. All three indexes, the major indexes I should say, the Dow, the S&P 500, and the Nasdaq, are on track to post weekly gains. So with that bit of good news, let's go on to three charts that could give us some insight into the week to come. First of all, as we usually do, we're going to look at our daily chart of the S&P 500 SPDR ETF, the SPY, which closely tracks our S&P 500 index. When I captured this chart today, it was trading at $229.08, or about $22.90 on the S&P 500 itself. As you can see, the SPY is trading nicely above the 20-day moving average, the red line on this screen, the 50-day moving average, the green line, and the 200-day moving average, which of course are all simple moving averages. Now, the SPY itself made a new all-time high yesterday, excuse me, at $229.71, and a new all-time closing high on Wednesday, 2 days ago, at $229.57. So we can see here that it's actually broke out of this base that we were watching forever, it seemed like, from December of 2016 through this month. And actually on Wednesday, it had this nice big move up, and at the moment is consolidating at these new highs right around 229. That's very nice. Now, our near-term support for this little consolidation going on here so far is $228.50. Then we have more support at $227.75, down to 200, we'll call it 225 even, and then a couple of days, if everything remains the same, that's where the 50-day moving average is coming in. It's pretty close to that right now. So we can say that there's pretty solid potential support at 225. Of course, we also are watching this pivot low down here at 222. That would be support that we really need to watch here. Should the SPY come back down, fill this gap it created, the gap up it created on Wednesday, and start a little lower. Should it do that, we have plenty of potential support here. And I say potential price support, because of course there's always a chance that buyers put their hands behind their backs if the market should fall and let the bears push it on down. But there's plenty of it here, potential support. So we do have somewhat of a safety net, you could call it that, in place. Now, of course, there's always a chance that the SPY on earnings next week, on the FOMC meeting next week, on the U.S. dollar perhaps going lower and helping out multinationals, there's a chance it could break higher here. And wouldn't that be nice for everyone if this bull market continues? Next week is going to be incredibly busy. We're still in the thick of earnings season, And as I said, everybody is watching the U.S. dollar. Everybody is watching the Fed. Everybody is watching earnings season. So a lot going on next week. Certainly going to be very, very exciting. Could break higher here. Could give up a little ground and break lower. Breaking lower to me, especially in a nice scenario like this, cannot be a bad thing unless, of course, it's more drama than we expected, because stocks need to go lower in order to go higher, so that would give us more opportunities. Now on to our next chart here. Our next chart is an index we watch quite a bit, especially when we wonder where the market's going next, as the iShares Russell 2000 Small Cap Index can act as a leading indicator in the market. This is the ETF on the screen is the iShares Russell 2000 ETF, symbol IWM. This is a daily chart. And when I captured this chart today, the iShares Russell 2000 ETF was trading at $135.78. Now we know that it made an all-time high back here on December 9th at $138.82. Since then, it's gradually descended lower while the other major indexes were pushing higher. And that makes me just one tick, just a little more nervous than I would be ordinarily, because we want to see the IWM moving higher. Again, it has the capacity for leading the broader market around. So what we see here is since December 9th, the IWM moving down very, very slightly down to about 134.50 to 138, move down here to 134 on this day, pop back higher with the broad market. So far has been unable to make a higher high, which is needed for uptrends, has filled what we call the gap today that was made on Wednesday. It gapped up to prior resistance, this trend line coming down over the top, or channel line. Today it's filled that gap. It's feeling a little bit puny again, like it overexerted itself. It is trading atop the 20-day moving average, the red line. The 20-day is now, we're going to call it horizontal, and you want to keep an eye on an index or a stock when the 20-day goes horizontally. That means that whatever it is losing some steam if it's been trading above it. We now have the 50-day moving average coming in here just a little below 135. We have a lot going on here at, I'm going to call it 133, 134. We've got moving average support. We've got potential price support here. So what we want then, if the trading gods are listening, what we want is for the IWM to stay above the 50-day moving average, certainly stay above 133. Should it break below the 133 line, then the IWM has the potential power to pressure the broad market. Think the S&P 500 here a little lower. So let's keep an eye on that. Of course, there's always a chance it could come down, bounce back up, and continue this uptrend. All of that we will find out next week. Now let's go on to our final chart for the day. We're going to look at a chart we haven't looked at maybe forever, but certainly we've discussed this industry group before. We're looking today at a chart, the ETF, the SPDR Aerospace and Defense ETF, symbol XAR. Now you can also look at the ITA, that is the iShares Aerospace and Defense. I like, for some reason, for a couple of reasons here, I like the XAR a little bit better. Of course, all of these ETFs, their charts or their price depends on what components they have and what the weightings the components have in their particular index. Now, this particular ETF has 36 components. The top components are Boeing, Huntington Ingalls, BWX Technologies, Arconic Incorporated, Taser International, General Dynamics, companies like that. Now the XAR here made an all-time high on December 8th at $66.91. Since then, it pulled back to a rounded consolidation zone that kind of moved between 63 down here at the lows and 65 up here at the tops. Now it looks like it's making this scoop that I've seen a million times before. And it looks like it wants, at least today, to break out back above this 65 line. If market conditions are positive next week, maybe it can break higher here again and move back up towards 66, 67, and so forth. Now, as usual, the 50-day moving average is very close to it here. It's up at 64 and change, so because of this particular pattern, I'm going to give us a little leeway here. You know that I generally want to stay and remain in stocks and ETFs that are trading above their 50-day moving average. But in this case, because of the pattern, I'm going to say I'd prefer it above the 50-day, but if it moves back down and falls below 63 in this case, then I no longer want it. I'll exit if I'm in it, and that will be my final stop here at 63 for the XAR. Boeing, the top component, they already announced earnings and they were a little mixed, but they were good, so we don't have to worry about that. Also, just a note, on February 9th, Cowen's 38th Annual Aerospace, Defense, and Industrials Conference takes place. And many times when these conferences take place, the companies who speak in these conferences can move the stocks or perhaps the indexes they're in higher. So that's just a note for you to keep an eye on. And of course, with Boeing being the top component in this particular ETF, that could be a good thing. So just keep that in mind. Now we'll go on to next week's economic reports. But first, please join us this coming Monday, January 30th, for our next session of Toni's Market Club. We'll talk about which side of the market to trade, have a mini trading lesson, and I'll give you stocks and ETFs that may become ripe for high potential trades. This is a low-priced, high-value opportunity to learn more about the market, become a smarter trader, and make more money. And by the way, we have a great group of traders in Toni's Market Club, from novices up to more experienced. So all are welcome in Toni's Market Club. For those who cannot attend our live session, no problem. The recording of our session is available just a few minutes after the session ends. For more information and to join, go to tonysmarketclub.com and check us out. Okay, with that said, please know we are in the thickest part of earnings season, and results from high momentum large caps will definitely move the market. And so keep that in mind, and then now we'll go on to next week's economic reports. We have a boatload of them. On Monday, we have PCE prices and pending home sales. Tuesday, we have the S&P Case-Shiller Real Estate Index, the Chicago PMI, and consumer confidence. Wednesday, very busy day. We have the ADP employment numbers, the ISM Manufacturing Index, crude inventories, auto and truck sales, and the FOMC rate decision. Thursday, we have jobless claims and natural gas inventories. Friday, we have the jobs numbers, the monthly jobs numbers, also very important. Again, join us for Toni's Market Club this coming Monday, where we will talk a lot about what's going on in the market in the coming week and what to expect and how to deal with it. Don't miss out on this fantastic opportunity to raise your trading knowledge and your trading profits. Until next week, keep green on your screen. I'm Toni Turner, and this is The Market Now.